Hello, Oracles. Today was the big day. The Fed finally cut rates. What rate cut did we get? We got a 50 basis point cut. So, again, we discussed it was going to be between a 25 or a 50 basis point cut. Then we were going to pay attention to what verbiage the Fed used to discuss what was going to happen, whether they're going to be hawkish or dovish, give us some clarity as to what we were going to see for the rest of the year, checking out the dot plot. So, we'll get into the details behind what the Fed went over today and what we can expect going forward for the next couple of months, 6 months, 12 months down the road, and what we could potentially do for our own portfolios. Now, again, none of this is financial advice, just tossing out some ideas, giving some scenarios as to what could potentially play out. And I'm going to tell you guys about one stock I'm actually going to be selling. Now, I'm not big about selling many of the stocks that I have on here, not selling any ETFs. For me, it's more about just kind of accumulating and building my portfolio up. But I do go through all of my stocks and ETFs, like I encourage you to do as well, and just make sure that the fundamentals of the companies or ETFs that you're holding are doing quite well and they're going to be holding strong. And it's something that you want to hold forever. So I did notice that there's one today that I do not want to be holding forever. And I feel like I could put that money into a better place. So I'll share that with you guys in a moment as well. Now, if this is some content that you guys like, please do me a favor, hit that like button down below, subscribe to the channel. Really helps the algorithm show that this is stuff that you guys want to be seeing, gets my channel out in front of more faces out there on YouTube. All right, so to get into the details, the Fed cut by 50 basis points, and it looks like half of the Fed was looking to have possibly over 100 basis point cuts by the end of the year, and half are looking at about under 75. So it seems like we're probably going to get about 100 basis points of cuts. That's 1 percentage point of a cut we'll get by the end of this year. So, of course, getting 50 basis points now means that between the next two meetings in November and December, we'll get another 50 basis points. I doubt they're going to do 50 and then nothing, or I doubt they're going to do nothing in November and then 50 in December. So chances are it will be 25 and 25. But again, we still have to go by data points that we have coming out over the next 6 weeks ahead of the November meeting. Now, the verbiage that we heard from the Fed in this one was very much like we had seen from previous about how inflation isn't too much of a concern anymore. It's more unemployment. Now, they are kind of declaring victory on this to get a soft landing, but we're not there yet. I still think we have a long way to go because don't forget, we're still feeling the effects of rate hikes. Yes, it takes about 18 months of lag to finally feel all of that. And it is going to take time, maybe not as long as 18 months, but it's going to take time to feel the effects of rate cuts. So sure, we get the announcement of a 50 basis point cut now. Maybe you'll see interest rates coming down in different areas around everywhere, maybe in automobiles and houses, but it's going to take some time to actually take effect in the entire market. So while we're waiting for the cuts to take effect, we're still feeling the effects of the hikes that are going on. So we still could have maybe 3 to 6 months more of some, pain from a higher interest rate environment. With that said, we are also seeing a speed up of the unemployment. Now, this is something that the Fed did mention that is a concern of theirs, is the rate of unemployment. Now, while it is still low, it's a concern at the rate that it's moving up. That kind of gives us pause about the fact that the Fed might be okay with the unemployment going up, which is why we saw the 50 basis point now to kind of slow things down, but they're okay with it going up to 5. But even Jerome Powell himself said that when you see it go up by 1%, it typically goes up by another 1 or 2% after that as well. So is the Fed just okay with us getting to 6% unemployment? I don't know. And don't forget, once we have that spiral going, that kind of is a self-fulfilling prophecy, as we've talked about. When you see the unemployment speeding up, that's less people who have money. Less people have money means that there's less spending going on in the market. Less spending going on in the market means that companies don't have as much revenue. They in turn have to cut more jobs because they have to feed the bottom line and pay their bills. That's that self-fulfilling prophecy that goes on. And then you just keep on seeing less revenue because less people have jobs. And eventually you hit that wall and the Fed has to do something like a massive rate cut because, hey, by the way, now we're in a recession. So we're in a recession at that point. GDP is going to be down at that point because spending is going to be down. And it's just an ugly scenario. Then the Fed has to do the emergency cuts of 75 or 100 basis points in one meeting just to kind of re-stimulate the market and give it that shock. So this is something that I've been anticipating potentially going on in Q1 or Q2 of next year. So we'll see how that all plays out. And again, the Fed's not going to mention any of that in this meeting with an election going on because they don't want to stir that pot up and cause any turmoil. And they say that they don't make any decisions based upon politics, but that is something that they don't want to make any disruptions on at this time, because it could favor one party or the other, saying, hey, we may potentially be going into a recession and people are like, oh, look at what the Democrats put us into. We must vote Republican. They don't want to make any sway like that whatsoever. So they're going to call it like it is right now and just kind of give us some gray area verbiage on that. And then after the election, we may get some information as to what's actually going on out there. And it might be scary. I don't know. Or maybe this 50 basis point cut is the way that the Fed is actually going to get us to a soft landing. So again, still up in the air. We still have 6 months to a year to actually see how all of this plays out. The Fed still has a lot of work ahead of them. We still have a lot of data points to go by. So again, for me, I'm just looking at preparing myself for all of this because we're not going to know what happens until after it already happened. So that's why I've got my portfolio set up the way it is to say, hey, I still want cash on the sidelines to take advantage of opportunities. I don't know where the bottom is going to be, but if I can see the market coming down and I can slowly put some cash into my portfolio, that means that I'm buying on the way down, catching that falling knife a little bit, but it's more about, just kind of averaging out to buy in at the bottom. Then as we're coming back up, I'm still buying on the way back up, but I can expand my portfolio at that time as we're coming back up because again, I'm not going to know when the bottom is. I'm not going to know when the top is. So as I'm doing this, I just take advantage of those opportunities to put my portfolio in the best position possible as we come out of this, if that is something we are going to be getting into. So right now, I have gotten my portfolio to the point where I am at my 9% cash where I want to be. All of my stocks and ETFs are at that phase 8 scenario. So as we get into this weekend, I'm going to take a look and possibly flip one section of mine, that stable income section, to phase 9 to be able to add more to that. Now, with me selling off this one stock I'm about to tell you about, that will free up about $480 right there to be able to put into different areas. I don't know if I'm going to deploy all of that or if I'm going to set myself up with maybe 10% cash and just flatten that out there and then just spend everything over 10% cash because that's a phase 10 area. Might do that just to kind of give myself that little bit of an extra cushion. Haven't fully made that decision yet, but I have decided to sell this one stock. The stock I'm going to sell is Bank of America. Now, for me, I'm selling it for multiple reasons, and I'm up 20% on this. So I have no problems with the bank itself. I have no problems with the company, but there are just some indicators in the long term that kind of tell me that there's other places that I'd rather have my money. So they have been losing market share. That's a big one. And just they've been getting less and less deposits over the years. And that tells me that, again, they're a huge bank. It's not like they're going to go under by any means, as far as I'm concerned. Maybe there is some underlying issues like we saw during the great financial crisis, but I don't think that's a thing. They're not growing. Their dividend growth is not as great as it used to be. And the yield itself at 2.62% right now, it's not terrible, but again, I could have that money in other places that it's actually going to grow. I could even just put that in cash right now and still make 4.5%. Even if that comes down by 0.5%, I'll still make 4% on that cash that I won't make on Bank of America. Now, again, with the rate cuts coming as well, that means that they're going to be bringing in less revenue on top of that from interest. And if we do get into a potential recession, you definitely don't want to be in financials during a recession. So the way I'm looking at it is, to me, it makes a lot more sense for me to sell out of Bank of America. I already own JP Morgan. I've got Visa. I've got MasterCard. I've got Amex. So I have financials that I'm bought into. And that doesn't even include the ETFs that already include all of those as well. So to sell out of that and to get my money freed up to put into other places that can actually give me more money back in both yield and in growth made a lot more sense to me. And I'm going to continue on doing this. Typically, when you go into a potential recessionary time, you want to kind of be really diversified because you don't know what's going to do well. My diversification comes in other areas like from real estate. I have a ton of ETFs that cover a lot of different stocks. I'm very diversified. Those individual stocks that I have are kind of areas where I'm like, you know what? I want to hone in on a little bit more. I want to put a little bit more money in these areas. And Bank of America just isn't it. So I'm not going to lose diversification by selling this stock at all. I'm actually going to free up some cash to put it into better positions to take advantage of any opportunities I see coming up going forward. So you guys can let me know in the comments below. Have you sold any stocks recently? Did you sell anything today? The market was pretty darn uncertain. Of course, we got a run up when we saw the 50 basis point cut, and then we saw it coming down, and then Powell spoke and it was up and it was down. And we almost saw like a daily head and shoulders pattern going right through the entire Fed meeting. And then we sold off into the end of the day. So again, I've mentioned it before. We've seen stuff like this happen, and then tomorrow we see a complete reversal and the market buys in. Or is this going to be a sell the news situation on that 50 basis point cut? And then we're going to see a lot of profit taking going on over the next couple of days and sell off even more, especially going into the uncertainty around the election. So obviously right now, a lot of the focus is going to be on the election, and we'll see the market move more towards that. And, we've got the CPI data coming out in October. We've got the jobs report coming out at the beginning of October. We've got PCE data that we still have to get. So we've got some other data points that are going to come out, but I think the major focus over the next 5 to 6 weeks is really going to be the election. So we'll pay attention to that as time goes on. Those are the moves I've made. I'll let you guys know what I'm going to end up doing when it comes to the cash that I free up from Bank of America. If I'm going to disperse it immediately, if I'm just going to save it in cash, I'll let you guys know what I come up with. I'll probably just sleep on that tonight and see if I have some revelations that come to me to let me know what I should or shouldn't do. Honestly, I don't think there's a wrong decision I can make unless I just go all in on a horrible stock, which that's not a place I'm in anymore. So it's either going to be cash or in something of a higher yield standpoint to bring in more cash flow generation for me. So that's all I've got for you guys today. Let me know your thoughts in the comments below. Do you think the Fed made the right move with the 50 basis point cut today? Do you think we're heading into a recession? Do you think this is a signal saying that we are getting ourselves into a worse scenario and unemployment is actually kind of worse than they're letting us on to see, and they want to try to get ahead of this? Or do you think that the Fed is actually going to get us to that soft landing and this is just the first step on that path? So you guys can let me know your thoughts in the comments below on that. Don't forget to like this video, subscribe to the channel. Thank you guys so much for watching. I appreciate all of your support. Have a great one.